Ladies and gentlemen, good day and welcome to the Q3 FY22 earnings conference call of Privi Speciality Chemicals Limited, hosted by Asian Market Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. Disclaimer: this conference call may contain forward-looking statements about the company which are based on beliefs, opinion, and expectation of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. Actual results may differ from such expectation, projection, etc., whether expressed or implied. Participants are requested to exercise caution while referring to such statements and remarks. I now hand the conference over to Mr. Saurabh Kapadia from Asian Market Securities. Thank you, and over to you, sir.
Thank you. Good evening, everyone. On behalf of Asian Market Securities, I would like to welcome you all for 3Q FY22 earnings conference call of Privi Speciality Chemicals Limited. From the management, we have with us Mr. Narayan Iyer, Chief Finance Officer of the company. We shall start the call with opening remarks from the management, and then we will move to Q&A session. I now hand over the call to Mr. Iyer for his opening remarks. Over to you, sir.
Thank you, Saurabh, and good evening to all my fellow investors and shareholders of Privi Speciality Chemicals Limited. A very, very warm welcome on a possibly a chilly weekend evening. I know I'm at the threshold of the weekend and spoiling your weekend by maybe an hour or so, but it's important that I stay connected, Privi stays connected to its very fond investors. And on that count, I can only say that the quarter that has gone by, October to December, was a very decent quarter. It was a comeback quarter for Privi, post a little bit of natural calamity that was a setback in July 2021. 21st, 22nd, and 23rd July, the entire Konkan area, including Mahad, where Privi's major facilities are located, was inundated by water, and it was about 8 to 10 feet of water inside the factory. And the factory had to be shut down for almost about 3 weeks or so. We were the first ones to restart the factory and come back. And as we did in the past, when there was a fire in our factory in 2018, we rose from the ashes like a phoenix. So this time, we just like flying off like a seagull, maybe from the water up, coming out and performing to the best of our abilities. And we're back with a very, very decent run rate, I will say that, to achieve our targeted goal, the wish list that we have, and move towards the overall ambition of first achieving this year's targets, and then go over to the 3,000 crore mark. This quarter there were a little bit of setbacks on account, as it's known in the industry, because of the increase in the RMC across board. Most of the RMC costs, like the acids, the solvents, the toluenes, including of course the coal cost, all this had gone up substantially on account of heavy shortages, materials not being available from China and from other countries, and of course the sporadic freight expenses or the freight costs just keeping on. But I could say that this is all to some extent arrested by Privi and the financial numbers that are there, and it's there in your hands and already displayed. We've been able to offset most of this increase in the expenses on account of yield improvements, process improvements, technical upgrades that we had undertaken in the last 2 or 3 years, spending a lot of capex, some cost cutting, energy saving measures, also undertaking some reverse power or the cogeneration that we have also created within our own factory. All this helped us to tide this unprecedented rise in the input costs. And broadly, I could say that we were able to arrest most of the increase in the so-called input costs by the in-house measures that we have taken around. There has been definitely an increase on a quarter-on-quarter numbers, as you would also appreciate the efforts that the company has been able to put in around and turn and give a decent, I could say, sort of a performance. And I hope most of the investors have not found many surprises in the results. Because there is an increase in the turnover by almost about 30% as you compare to the immediate September quarter and the December quarter. But I'll say that a better comparison will be the December 20 and December 21 quarter, where our sales has increased by almost about another 30-odd%. The profit has increased from about 25.5 crores on December 20. We come down up to about close to 35%, which once again signifies a 40% increase in the profitability numbers. And there has been an exceptional item, as you know, that some of the expenses on account of flood is being considered by us as exception. So in this quarter, there has been an addition of about 2.12 crores. So coupled with the total expenses of 17.5 crores, 10 crores of money we have already received from the insurance company. So there is a 7.36 crores as an exceptional loss, I could say that. But it is only time, in this quarter, we expect the entire money from the insurance company on account of the expenditure and the losses, the business interruption losses that was there. We are fairly confident that the entire money to Privi should be there and it should appear in our financials by March. So on this note, and some of our projects, which has been also the highlight that we have embarked upon a very ambitious 500 crore projects on three main products. Prionil, I'm happy to say and inform the investors that we have commissioned Prionil as a project at our Mahad Unit 7, and this was commissioned on 31st of December. And in the month of January now, the Prionil production has started. And very happy to say that it was on the 14th of January, or I could say the day of Uttarayan, that the first invoice for Prionil was also billed to one of our esteemed customers. So that's something which is there. Yes, the spot business market is something that we will tap around before we are in a position to get into the contractual business. And the other two projects, the Camphor as well as the Galaxomas, is very much on track, and we expect that by March, most of these other major projects should also be capitalized, and they will start bringing in revenues from the first quarter of 22-23. So based on that, this is my introduction remark. I'm sticking now currently only to the quarterly performance. I'm open for any questions, any suggestions from the investors and from you all.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amar Moria from Alpha Accurate Advisors. Please go ahead.
Yeah. So thanks a lot for the opportunity. So couple of clarifications. Firstly, sir, on the ongoing capex, you had elaborated that Prionil has already commissioned and Galaxomas and Camphor will come by March. So is it fair to assume like this whole capacity will be largely available for the spot, and or we'll be getting some benefit of the contractual also?
Can I answer you, Amar?
Yeah, please.
Thank you. And basically, see, Galaxomas and Camphor are huge volume products. So prima facie, we will be in a position to sell only in the spots from April to June. Some of our customers, they prima facie also, tender some asked for some tenders to be floated for their second half requirements.
Okay.
So we could possibly participate in some of these customers' second half requirements. But the bulk volume, definitely when we talk about, my top 25 customers who are global players, so these two, out of these top 25, almost about 10 to 12 of them, they go in for annual contracts. So I have, definitely I will not be able to get such volumes as we normally undertake for all our other products. So that's a bus that we have missed, but the delay was beyond our control and beyond our measures on account of the second wave and the oxygen supply is not being made available by Government of India and respective state governments also, because it had to be given a preference to the COVID patients. And then you had an onslaught of the third wave coming in, price escalations. So all this led together, there has been a delay. You can prima facie say that for the next 9 months or the first 9 months of the next year, we will be in a position to sell a maximum on our existing products, and to some extent from these 3 new products which will come about. In fact,
Okay. So for the next full year, for this whole 3 capacities, should we expect at least 20, 30%, 40% kind of utilization level?
For the entire year of 22-23 you are talking about?
Yeah, sir. FY23 whole year.
I think with Privi, yes, we could even stretch ourselves to about 40% of our overall capacities, if it's possible, in fact.
Okay. And secondly, sir, this is my second question. Secondly, sir, the capacity which we had actually commissioned in FY21, and the benefit of which, kind of 800 crores to 1,000 crore benefit was expected to come going forward. So we'll be seeing the majority of the benefit in the FY23, and how much we had seen of that particular expanded capacity benefit in FY22?
FY22 is still on. So, definitely there has been an increase in the volume by about close to 3.5%. Of course, we lost some volume because a month of sale was lost on account of the flood. So, I was not in a position to function itself. Otherwise, definitely we would have been able to achieve all the volumes with regard to the main pine-based products because that was something which was fully being sold to the capacity that we had, because these capacities were all put to use by 31st of December 2020, and we had contracts in place, and it was going around. I will say that as far as the main pine products are concerned, yes, my factory today is running into full capacities. As far as the specialty chemicals is there, specialty chemicals is just about looking to get the demand in bits and pieces and specialty chemicals is something which is used in high-ended cosmetics and perfumes and all other applications. Broadly, from the market sentiments, I feel that this should come into a full play somewhere from around April or May, and more so from the period of July onwards, when actually people start using, and there is summer across globally. People will start using more and more of these high-ended specialty chemicals, and we also expect the global offices and commercial establishments all to start maybe post this endemic, as it is now looking like, so people will start moving, travel around the world and all, so from the Q2 of 22-23. So we can expect specialty chemicals demand to also move up, more so from August and September of 2022. Then the capacities on account of the specialty and citral will also go up. So I am very, rather than using a word we at Privi are very, very confident that the pine space will be fully utilized, 100% capacity. Maybe it could also go to 102, 103% if we are in a position to maintain our factories to the core. The specialty chemicals could be somewhere around 70-75% of its utilization of its capacities that could be there. The phenol space will be 100% sold out. It's already 100% sold out, I can say that, And the last but not the least phase is pine has always been our forte. So if I had to cumulatively average it out, we will be something around, I could say, about 85 to 90% of our overall utilization of the capacities that were there before these 3 new products come in fact.
And lastly, sir, in terms of the EBITDA margin, like, as you indicated, this is largely because of the RM inflation and other manufacturing costs are at elevated level. So any solace we are expecting from, let's say, fourth quarter or the first quarter, so when we can see the bounce back in the margin and reaching to our guided level of around 15 to 16% kind of thing?
Okay. No, we will be back. Currently also we are at about something like 15.5%. And as I keep telling all of you investors, the forex income that you see in previous balance sheet is not any derivative or a hedge gain. It is prima facie a fluctuation in the timing differences of my sales and purchases and the realization that it happens upon. It's purely an Ind AS accounting entry. And all this is coming and from my main flow of business operations, which is sales in exports and possibly purchases in imports. To give my investors a very happy news on this evening, the additional percentages or additional margins will definitely set in right from 1st of January 2022, because the contracts that we have entered for calendar year 2022 with most of my global players are higher than what it was in the year 2021. So that's a good news that some of these increased expenses on account of the input of RMC as well as the increased freight costs, will be met on account of the higher contractual values or higher sales value that we will obtain from our customers going forward in this year. And the increase is anywhere on an average between 5 to 8%. As compared to the 21 prices that we had gotten in fact. So that's a very good news, and the bounce back you could see in this quarter itself in fact. Right now also whatever I'm selling is with a bounce back version in fact.
Thank you, sir. Thanks a lot, sir.
Thank you, Amma. Thank you for your questions. Pleasure talking to you.
Yeah.
Thank you. The next question is from the line of Nakshita Mehta from Credent Asset Management Limited. Please go ahead.
Good evening, and thank you for giving this opportunity, and congratulations on a fantastic set of numbers.
Thank you very much, Nakshita.
Yeah. So my one question is again, the RM cost has, compared to last quarter, has gone up by as much as 47%. And if you compare it to the corresponding year quarter, it's gone up by 25-26%. But still, the margins are probably relatively at the same level. So I want to know what measures you took to, preserve the margin. Any special measures?
Okay. Like I really do not know how you got a 45% or a 70% on an RMC, which is a growth. You also will have to see a threshold because when you're looking at a cost of materials consumed, the changes on account of the inventory will also be forming a part of it. And percentage wise, to give you the exact numbers, because just my board meeting has got over and we were deliberating about it with the auditors. So there is an increase, overall increase, if I had to give a very, very fair and rational view. The growth or the increased RMC expenditure only for this quarter as compared to the previous quarters has been about something close to 6.78%. If you compare it with the earlier overall 9-month period, if I say, so the increase has been about close to 0.5%. So that means on 1,000 crore of sale, a 0.5% increase is what has transpired. But if you only look for the quarter of December vis-a-vis the quarter of September, or more so the quarter of June, there is an additional 6.74% of RMC increase. So this increase, prima facie, is on account of the unprecedented increase in the RMC cost. Like I'm just going to narrate a few examples. acetic anhydride, which is a very important ingredient for us. What we used to buy it for about say 70 rupees and 90 rupees or so, is now currently being bought in this particular period closer to upwards of 200 and all. It's come back now to about 150 or 160, and we expect it to further come down. Similarly, some of the other solvents, phosphoric acid, sulfuric acid, were being sold at a very, very all-time high, and these are all chemicals which we use in bulk volume. And this is what actually has affected my RMC inputs, in fact. So some of the spot market higher prices that we were getting on the sales has actually helped us, sail through this quarter and yet manage the overall margins when we talk about on a sustainable basis, in fact. The measures that we have taken is that we have started reusing some of these acids by recovering these acids and reusing it. So reducing the overall usage of maybe an acetic acid, a sulfuric acid reuse plant has been there. In fact, phosphoric acid is being reused by us. So that's how we are trying to curtail on some of these unwanted expenses where we can do a recovery. And secondly, our R&D, where our strength is our R&D, as my chairman and managing director always says, So the R&D has been able to come about with a new technical ideas, new process innovations in manufacturing my main key products, in fact. And my main key products are 5 of them. That is basically the dihydromercinol, the Ambiflo, pine oil, terpineol, and terpinforol. So all of these, there has been constant innovations in ensuring that how do we reduce our input costs, how to improve the yield, how we can, remove some of the unwanted chemicals that come into it, so that by using these acids and solvents, you burn some of the natural raw material like the pine. So by using a natural supplement like a resin or reusing some of these acids, we are able to recover the input cost. And that's how we've been able to improve the yield, prima facie getting a final product percentage better than what it was in the earlier quarters or earlier periods. And that's how you see that our margins have been, we've been able to sustain and maintain the margins, or almost try to maintain the margins that we were achieving. And we are confident that now with the the increase in the selling prices, our margins definitely will go up starting from this quarter itself. And as all of you investors know that Privi always is like an MS Dhoni. The first 3 quarters could be slow, but the 4th quarter always is a big bang for us, and we expect this quarter also to be a big bang, in fact.
That's very insightful. Thank you. My another question is on the debt. So in your presentation, I saw that there's, heavy debt, both long-term and...
So just to inform all investors, we just uploaded a investor presentation. Sorry, I was delayed in, sending this across to all of you. I don't know how many of you have been able to go through it, but I was tied up post the board meeting yesterday with some other work. And so you all can see that, and this presentation also has the debt portion. Yes, you can continue with the question.
Yes.
Sorry to interrupt. Ms. Mehta, may we request you that you return to the question queue for follow-up questions?
Yeah, but this is my second question. Can I just complete this one? Then I will go back to the queue.
Okay.
Yeah. So I wanted to ask that the debt on both, long-term and short-term, current and long-term debt are pretty huge. So is there any reason as in why are they, both of them are so...
Yes, the long term was already approved. It was only that we had not availed it at one go. As the projects kept on moving around, we were drawing these long-term borrowings prima facie from the banks. And it was also that a part of our own earnings, we were to deploy back into the capex. So the overall capex is about 550 crores. Out of which the borrowing that we had done in the last three years or so has been only to the extent of 250 plus 56, 306 crores or so. So the delta is the profit that the company earned, and post keeping it for the dividend as well as for working capital. the balance had to be utilized into the capex. So that's why that you see that the borrowings or the debt looks to be on a higher side. However, having said this, the new capex, the new projects, once it sets out and we start earning the revenue from that, your debt position will come down, because you are looking at a higher sales, which means higher collections, and possibly reducing the overall borrowing or the working capital immediately. And the debt, the long-term debt, is basically over a 7-year period that we pay off, and it will reduce as per the schedule or as per the periods at which we have borrowed from various banks. So this is a temporary phenomenon that you could possibly see, that there is a higher debt, in fact, and maybe for the very first time that overall debt has just edged past my overall equity or the net worth of the company. But it's a temporary phenomenon, not to worry about. And as I said, if this is going to be a bumper quarter for us, you'll see that previous performance in March is going to be a much different scenario as compared to what you're possibly seeing now in December.
Yeah, that we're confident of. Okay, just one follow-up on this one. Can you tell us on what maturity schedule is this debt on? I mean, how many years are still left to pay off?
Ma'am, every loan has been taken for a period of not less than 5 to 7 years. So some of the earlier loans that we had taken, so that will be repaid as per its schedule. So the first of the so-called, and we are paying on a quarterly basis, because these are all 2 years moratorium or 18 months moratorium, with a 5-year quarterly payments to each of the bankers, in fact. So every year I will have a repayment schedule of about 30 to 45 crores going forward for the next 5 years now.
Okay, great. Thank you so much. And good luck for your next quarter.
Thank you very much.
Thank you. The next question is from the line of Dushyant Mishra from Sage One Investment. Please go ahead.
And I know the last call we mentioned that we're still 15 months from commercialization, but I just wanted to check if there were some updates regarding that, how the technology transfer was going, if there were any hiccups from the company.
You're trying to talk about Prigiv and the technology transfer?
Yeah, especially with Givaudan.
Yeah, so that process is ongoing. The technology transfer is happening around. So it's a greenfield process. There is going to be a time-consuming affair. The land has been acquired. We have already made an application to the Environment Commission, or as it is known in India as EC, for the various products that we are going to manufacture in the so-called joint venture with Givaudan at Prigiv. And this we expect could be about close to an 8 to 10 month affair before finally the Environment Commission gives us the approvals for all the products to be manufactured. Parallelly, we have engaged with a basic engineering company firm and an external agency to help us design the basic engineering with regard to the layouts and the requirements of the equipment for setting up the projects. So this way we are doing it in this 8-month period or 10-month period before finally we get the permission from EC, so that we can start being onto the field immediately, maybe just prior to the monsoon or so, we can start the excavation work and start doing the civil work. So that work is parallelly going around. Of the set 42 products that Givaudan has asked us to work, close to about 14 of them have been successfully met the standards of Givaudan at our R&D scale. Our research lab have been able to manufacture these 14 products to the satisfaction of the Givaudan technical team. Balance about 10 odd products are in the pipeline at the research and development, because it's not that I have an R&D that I can completely stop doing the innovation work for the main parent company and only focus on the 42 products that Givaudan wants. So it's section by section, in fact, and we are doing it. And we are confident that this technology transfer, what is coming from Givaudan to us, will happen in a very synchronized manner. And we have no doubts that Privi will be in a position to manufacture these products to the likes of Givaudan themselves, in fact.
That's wonderful to hear. And just a quick question on our research and development as well. At a time, how many products are we working on? So this is apart from what we're doing with the JV partner. Just on our own self, at a time, what is in a pipeline in the research and development? And I'm sure not all of them end up seeing light of the day, but just a ballpark idea.
You want to know how many currently doing research at both my research labs? Is that what is your question, Dushyant?
Yes, that is correct. That is correct.
A difficult question to answer, but close to about 14 to 16 molecules we are working, of which we are fairly successful with 5 or 6 of them, and a couple of them we have already started doing at the pilot level, which is what our chairman in our 1st of November address to the investors. He happened to say that the launch of his most ambitious project, Menthol, that Privi was successful at the research level to crack the menthol, levomenthol biochemistry, to manufacture levomenthol on the most novel technology. So that's something that we have scaled it up to the pilot level. So this could be about 14, 16 products currently that we are working around.
Okay, perfect. And what is our quarterly run rate on research and development expenses?
Close to about 6.5 crores.
Perfect. That's all from my side. Thank you very much.
Welcome.
Thank you. The next question is from the line of Ashish Ubglanavar from InvestQ Investment Advisors. Please go ahead.
Yeah. So I just wanted to understand a lot of things are going around as far as a lot of activities there as far as Privi is concerned. So if you could enlighten us about the Jordan tie-up, what is the roadmap for that overall in terms of certain numbers, or what are we trying to build here with them, and the main efforts of Privi, because what we've been hearing in the last few interactions with the management is we are trying to basically over the next 4 or 5 years around 300,000 crores of top line and stuff that we've got to know. So if you could just help us understand these aspects, how they are working.
See, the 3,000 crores of number, what we have been talking about by us in the last 1 year or so, are going to be from products manufactured by the main parent company, and it doesn't take into cognizance or account something that Prigiv is going to offer. Because the 3,000 crore number has come in the AGM of 2020 itself, and that was because at that time itself we had embarked upon the capex plan for the 3 products that we are now almost in the final stages. So this is what our MD had talked about with all this 550 odd crores that finally we are going to spend around in finishing and completing the 3 main projects, the backward integration and some of the expansions on the dihydromercenol and the Ambiflor and the pine oil. All this put together will take Privi closer to the 3,000 crore mark. Depending on the price increase, it could be up and down by 10% plus and minus or so, in fact. As far as Prigiv is concerned, or Givaudan's products are concerned, Givaudan continues to be my very important customer to me. They are always at the top 2 or top 3 customers, and they have been so in the last 10 to 15 years. Givaudan has been very, very important. Why Givaudan has come to us is not because they want some sort of comfort or so. It's only because they have seen Privi delivering quality, technically sound products, not just on the bulk volume but on the specialty chemicals also. And Privi has the capability of turning around various reactions like the Grignard, the pyrolyzing, the hot air insulations and all that sort of stuff. So we have been very, very good. Technically, it is a proven thing that our products meet to their standards. Second, we are a sustainable company. Having the backward integration into our fold, we are not left at the vagaries or mercies of the spot market, which is what the Chinese players normally do in the pine space, in fact. So we have a backward integration plan, and we have contracts from various CST mills across the globe, US, Canada, Scandinavian countries, Russia, all of these countries, where there are paper mills and where pine trees are cultivated to obtain the softwood or craftwood. We have tie-ups with many of these mills, and where CST was obtained on tender basis anywhere between 6 months and 3 years. Some of them are firm contracts, firm price for a year or year and a half or two, and some could be on an annual basis. The prices differ. So being a sustainable player, completely zero liquid discharge in our unit 2, and very shortly for all our other units also going to be zero liquid discharge. Our Jagadia unit or the Gujarat unit is already a zero liquid discharge. We are reusing our water, so there is an RO plant in place, there is an MEE, there is an incinerator, there is an ESP for the chimney or the coal thing. They feel that we are amongst the top ranked companies following ethical practices in manufacturing chemicals, and that is why they have come to us and looked around and stated you could possibly be partnering us to manufacture some of these low volume, high value products. And that's the reason we have entered into a separate JV, because they wanted to ensure secrecy with regard to the technology transfer that they are doing for these 40 products, which currently they are manufacturing themselves for their in-house consumption. They don't sell it to anyone else, in fact. So this gives an aperture to prove our credentials that Privi means quality, and Privi's technical capability is none lesser than anyone else in the world. And that's the reason that, and always having a tie-up with the world's largest fragrance company, it's a feather on the cap of any Indian company, and that's why we are done, and we have agreed for this JV with Givaudan, which gives us our ability to showcase to the world, yes, Privi means quality, and Privi means, technically a very sound company, in fact.
Okay. A follow-up on that, basically, this journey from 1,200 crores of top line to 3,000 crores, was the kind of conservative top line that the time frame that we are looking at here, maybe 4 years or 5 years? And secondly,
we are looking at another maybe 2.5 to 3 years.
Oh, is it? And what would be the JV doing by then? Maybe another 4 years. What significance does that JV bring to us in terms of numbers? So if 3,000 crores
basically gives some sort of a comfort that Givaudan will continue to be one of my preferred customers. So most of the profits or most of my volumes with regard to the major products on the pine space, they are my largest consumer. So I also retain their share on my growth in those 5 big products, because as we have been saying in all the investor meets, and whoever investor have also come and met in, that we will continue to maintain and retain the share of our volume on the pine space going forward also. If any pine like diatomycinol keeps growing at a 4% on a yearly basis, which means we are talking that from a 25,000 ton volume of business, if it is growing at 4% every year, Privi will definitely want to maintain a 30 or 35% share of diatomycinol going forward also. So, and where will this increase be sold? It will be definitely sold to all my customers, and especially the top 15 of the giants and top 25 global players, in fact. So that we would want to ensure that we are in a position to keep growing going forward also, keep our customers very comfortable, and treat us as a preferred supplier to them, because going forward it's going to be a world of sustainable, renewable raw material, which is going to be a part of any sort of a blend. Because, this is a law which will start coming around. Some other countries have already taking it very, very seriously, and it's only time that we'll talk about that. By following sustainable measures, and renewable raw material is going to be of prime importance, and most of the products that we are manufacturing in the pine space are considered as renewable raw material, and the processes and the technical know-how that we are adopting will make us fall under the renewable raw material sourcing suppliers, and we will be at high demand going forward in that.
Okay. Thanks a lot. Thank you.
Thank you. The next question from the line of Chintan Modi from Haitong Securities. Please go ahead.
Yeah, hi, sir. Thank you for the opportunity. Sir,
Hi,
my
Chintan.
question
Good
is,
evening.
sir, good evening. So my question is with respect to the other expenses going up very sharply during the.
Yeah. Hello.
The line for current participant is disconnected. A reminder to all participants, you may enter *1 once again to enter the question queue. The next question from the line of Tanush Mehta from Scantum Wealth. Please go ahead.
Hello.
Yes.
Yeah. Firstly, sir, congratulations on a great set of numbers.
Thank you very much.
Yeah. So, sir, I have a few questions. So, firstly, because of in Q3 we had to have a plant shutdown. So, can you quantify what sales could have been lost during that period?
Close to about 80 to 90 crores.
Okay. And sir, out of all these facilities that we're having right now, all of these facilities are zero discharge?
Currently, Unit 2 in Mahad and Unit 6 at Jagadia are zero discharge. And the other units, 1, 3, 7, we are progressing towards zero discharge.
And we can expect them being zero discharge in a couple of years?
Maybe by March 23.
Okay. Sir, basically, if I was to just look at the specialty chemicals market when it comes to flavors and fragrances, it's usually seen that a few products when they hit the market, for example, it's musk or camphor based, they have a extreme long shelf life and it finds its usage in different kind of products and varieties. So how so how does innovation play a role here? Because whenever a fragrance that hits the market, it's usually such that the same product volume keeps on increasing and other players make the same product. So how do we differentiate here, or what is the key USP we have in this sector?
Okay. The key USP is by technical capability to keep upgrading and innovating to manufacture these products to the satisfaction of each of our customers. Because every customer could possibly be using the same mask, but they may have a purity level also almost on similar lines. But there is a nose perception which is known as node, a high node or a low node or a medium node. So this is something that we are manufacturing, and we have been able to control the temperatures when we are manufacturing this on a continuous basis, knowing what customer requires which particular nodes and so. And so the customers are comfortable with the products that we are manufacturing and delivering it to them. And this could be the only differentiation that Privi has as compared to maybe some of its competitors that have, because we are continuously innovating and improving on the processes and the technologies that goes into manufacturing some of these bulk aroma chemicals I'm talking about, in fact. And as far as the specialty aroma chemicals is concerned, very few in India are having the technical capability to manufacture these specialty aroma chemicals. Most of these specialty aroma chemicals from some of the overseas competitors that we are having, and the overseas competitors who are having an Indian arm, in fact. So there the competition is purely on the technical front and how we are able to surpass and do an edge as compared to some of our competitors. So beyond that, even I can't really visualize as to what would be a better answer than than the product quality that we deliver to them.
Yeah, I understand. So is the pricing, when we talk about when we come to pricing, because everything boils down to that. So our pricing is as competitive as that of the market in spite of, having a better quality than them, or how does our pricing go, like on a like-to-like basis?
Absolutely. Okay. So on a like-to-like basis, we still continue to be an Indian company, and I'm very proud of it. However, some of the global players still feel that we are not possibly white-skinned. So some of my global competition or competitors, they still have an edge as far as the pricing is concerned, but that gap has definitely come down what it was about 10, 15 years ago and what it is today. And I am in a position to get maybe a premium as compared to some other Chinese players who are selling or competing with us, in fact, on especially the pine-based space that we are operating on, in fact.
Okay. And sir, just a last question. So, sir, in the recent comments you spoke about that, most of these maybe Chinese companies or any companies into this segment, they have, these spot supplies being a major part of their top line,
Correct.
taking advantage of maybe the pricing or inventory or whatever we call it.
Correct.
So as a part of our revenue, sir, what is long-term contracts as a part of our total revenue? I mean, is it like our entire sales is based on our, basically what I want to understand is that out of the current top line that we've done, how much would be towards long-term contract or how much would be towards spot? Because then our inventory is also structured in that manner.
Okay. Broadly, see, the long-term contracts are only with the global MNC players. Even a company in India like the SH Kilker or Oriental, now known as Camphor, so though they are competitors, but they are actually my main customers, main Indian customers also, in fact, and of course a host of other companies in India. So no Indian company believes in giving long-term contracts. So they all believe in PO-based monthly or quarterly requirements or bi-monthly requirements. So the global players are the ones who enter into long-term contracts. 80% of the major global players go in for annual contracts. About 5 or 10% go for quarterly, and about 5 to 10% go for the half-yearly contracts. So contracts, prima facie, account for about 65 to 70% of my revenue. So when we are formulating a budget, we ensure that all the main products that we are into. And on the pine space, this can even go as high as maybe about 80-85%, in fact, so that the bulk of the volume of the pine and on the phenol, if I am able to contract to the top 30 players of the world, it gives me a great sense of relief to know that my annual budget for the next year will definitely be met or surpassed. Because then I'm only left to a very limited number on the spot on the main products. And as far as the specialty and the other products are concerned, in fact, having a very less competition, or we being one of the better players in this specialty chemical, definitely we will be in a position to sell even in the spot market if we don't have too much of long-term contracts. So having said that, for this year also, we are fairly insulated ourselves to ensure that the number that I just talked about have been contracted with all my 15 to 20 major global players of the world, in fact.
Okay. And if I could just squeeze in another question.
Sorry to interrupt. Mr. Mehta, may we request that you return to the question queue for follow-up questions?
Yeah. Okay. And sir, all the best for the coming quarters, and hope that you achieve 3,000 crores top line before you targeted.
Thank you very much.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants, please limit your questions to 2 per participant. If you have a follow-up question, please rejoin the queue. The next question is from the line of Chintan Modi from Haitong Securities. Please go ahead.
Yeah, hi, sir. So The question that I was asking was with respect to the other expenses, whether there was any one-off in that during the quarter, because when we look at sequentially, we have grown the sales by almost 95 crores, and we haven't seen any operating leverage benefits slowing down.
Mm-hmm. So you're only talking about the other expenses increase in this particular quarter?
Yes,
yeah?
sir. Yes.
This other expenses increase in this quarter is on account of the phenomenal increase in the coal cost, because in other expenses you find the operating expenses of electricity, coal for generating the steam. So coal cost has shot up from about 7 or 8 rupees to close to 16 and 17 rupees. The bulk of it was also purchased at 13 and 14 and 15 and 16. And coal forms a very important part of a raw material for me because I require steam in all my products. Steam is an integral part of input to do my distillations or to do my chemical processes, because without steam I will not be in a position to do any sort of a chemical reaction. So the power cost in this particular quarter has been over the roof. So that's one major increase, an increase of close to about 3.5-4 crores in this quarter itself I spent on power, that is on coal cost. The second increase has been further increase in the freight expenses on the export freight. What you are not able to see is the freight expenditure on the RMC, which is actually coming as a part of the cost of raw material consumed, and that also is a part mainly contributing to the increase in the RMC cost. But here in the other expenses, you have export freight and selling and distribution expenses, where if I had to compare on the June quarter, because September quarter could be a misnomer because the volumes were not there. So if I compare on June quarter or up to the September quarter rates, this quarter further there has been a deterioration in the rates on the export freight, and export freight has jumped up by another 15% from the rates that we were giving in September, and close to about 22% increase from the rates that we were giving in June. Because we at Privi believe that it is customer who comes first, and we go all out to ensure that the products reach my customers on time every time, and for which we don't mind even paying a little bit of extra expenses on the freight. This we have absorbed it in the second and third quarter, but having delivered the products to my customers on time, most of the customers have ensured that there is an increase. They have also allowed us an increase in the freight expenses when we have quoted for the calendar year 22. Many of them have also agreed to foot the bill on the increased freight expenditure.
Okay, sir, got it. So, and second question is with respect to the mix between exports and domestic, whether there was any change with respect to that mix compared to our normal mix, or it remained largely the same? And any specific trends that you could highlight in terms of the various geographies which are picking up?
No, sir. Mostly it is all almost on the same lines. There is not much of any change in the geography situation also. And Europe continues to be my major customer, followed by India. And US is also a very, very important market for us, almost contributing about 60% of the thing. So markets are almost same, in fact.
Okay, sure. And just one last one, that for next year, considering all the price hikes and that we have taken, can we assume your EBITDA margins to come back to you have been guiding between 17 to 20% kind of an EBITDA margin range? Can we expect it to bounce back to those levels?
Absolutely.
Oh, okay. Fine, sir. Thanks you, sir. That was very helpful.
Thank you, Chintan. All the best.
Thank you. The next question from the line of Amar Moria from Alpha Accurate Advisors. Please go ahead.
Yeah. So thanks a lot for the opportunity again. Sir, just to understand a little bit on this other income, as you were indicating that this other income, large quantum is basically a kind of operating income. So how much percentage of this 10 crore would be like kind of operating income we can consider?
9 crore 96 lakh 48,445.
Okay. So this large part is like operating income only.
Absolutely.
And secondly, sir, just to understand, as you indicated, 3,000 crore kind of a revenue in, let's say, 2.5 to 3 years. So is it like this will be more front-ended, let's say, considering 23 will be the first year, or it will be more back-ended kind of thing, like, coming in second or third year?
No, Amar, I'm not able to follow your question.
So basically what I'm saying here is that reaching the 3,000 crore mark, let's say in next 3 years, right? So largely, let's say we will be closing the year at, let's say, around whatever number, and assuming that 23 will be the first year, 24 will be the second
absolutely.
year.
Absolutely. Okay. So what you're suggesting is, about 2.5 years from now. That's correct.
Yeah. So basically, is it like linear kind of a number, or like, because, as you said that first year will be like a 40% kind of a, utilization for the expanded capacity, and the new capacity, let's say specialty, will pick up also in the second half. So is it like the second year would be a normalized growth year, or because when I divide this number into 3 years, basically we see a very hyper growth in your company.
You can expect that. So, if we have spent a huge amount, you should expect that sort of a growth also, because this money, what we have spent, has to give me the returns also. Otherwise, we are not interested in spending such 500 or 600 crores and ensure that we don't grow, right?
Okay. Because then, you are just talking about more than 25%, 26% growth every year, basically.
Possibly, yes. You have seen Privi growing at a CAGR of about 22% even the last 10, 12 years broadly. So here we are talking about, and those time, we were not embarking upon such ambitious projects as we are now doing around. And of course, our bandwidth has also improved. We have good investors like you. We have very good bankers who are ready to, possibly fund us. We had some good set of private equity investors who have also helped us in this journey. So I really feel that, growing at possibly anywhere between 22 and 27% on a yearly basis should not be a difficulty. There have been some bad years because, the prices on some of the aroma chemicals fell very, very low. So with markets realizing that what should be the correct value of the most of the aroma chemicals and the specialty chemicals, I do believe some of these will come from price escalations, and most of it will come from the expansion that we are doing on our capacities, the new products, as well as going forward some of the existing products where we, as I've been and as we in Privi keep saying that it is our zeal and focus to ensure that we maintain our market share on all the top 5 products, as well as on the 2 phenol products at Jagadia. We would like to maintain the market share, and if that keeps happening around 3,000 crores in the next 2 to 3 years, should be definitely achievable.
Thank you, sir. Thanks a lot. Best of luck for the future.
Thank you very much.
Thank you. The next question is from the line of Rohit Nagraj from Emkay Global. Please go ahead.
Yeah, thanks for the opportunity, and congrats on a very good set of numbers.
Thanks, Rohit.
So the first question is probably it might be a basic question, and since I'm attending the call for the first time, we have said about 3,000 crores of top line. How are we placed from the business development team point of view for both our domestic as well as overseas markets? I mean, have we expanded the team we are currently in terms of expansion, and how are we placed from that perspective? Thank you.
Okay. We are not a B2C company. We continue to be a B2B company, prima facie. So that's the reason that we may not require too much of people at the marketing or the business development level. Having said that, there are 2, the new product that is now going to come about, Camphor. So Camphor is a product which is more Indianized, I will say that. It is, Camphor has got a huge amount of relevance religiously and possibly even pharmaceutical wise also, in fact, for medicinally wise also. And India is a huge consumer of camphor. I do believe that we may have to possibly, look at selling camphor a little differently than what we have been selling on the aroma chemical, other aroma chemicals per se. In fact, so that's a strategy that we have, already evolved at the company level, and our marketing, business development people, and the business development team has really strengthened up themselves to ensure to enter into the camphor market with all the zeal as much as they have been doing on all the other products. So that's the only change that will require how to sell camphor, because this will not be a sale that can happen at a 60-day credit or a 90-day credit. As you know, most of the camphor manufacturers are in a position to sell this maybe across the counter in a 7-day or a 10-day, 15-day, 30-day. I think not beyond 30-day credit period. Not many manufacturers are offering today. In fact, So those could be some of the changes that we are gearing up internally in our company also. And as far as the people and the structure per se for achieving almost double the sale that we will be doing in about 2 to 3 years time, the company already has a good 2-tier and 3 tiers of top level, middle level people, all professionally qualified in most of the departments and most of the areas. Whether it is the starting from my own finance, I have a good solid 2 to 3 layer people. There is a VP finance already in place. There is a GM finance, in fact, and then you have deputy GMs heading each functional head, whether it is the banking per se or the taxation per se. So those structures have been put across. Similarly, in the production level, each of the units are considered as SBUs. And above them, there is going to be a functional head. Then you have a VP at the sectional places. Overall in charge, there is also at the very senior level. And all these functions at business development also, there is country-specific heads. Then you have the CRM, that is the customer relation managers to most of the strategic and key customers that it is so. And then you have the India head. So that way those layers are put in place, in fact, and we do believe that with what we have done in the last 3-4 years, it should help us really go ahead and meet the target of 2x PV and possibly beyond that whenever we come out with various launches. We should be in a position to handle that sort of a volume. At the operational level, we will possibly require some new people, some new thought process, so that recruitment keeps happening around, and HR is on their toes, to ensure that those requirements are met ASAP, in fact.
Right, sir. That was a really comprehensive reply. So just aligning to that, in terms of the succession planning from the promoters, any thoughts?
Okay. As you are aware, we are having 2 promoters, the Rao family and the Babani family. As far as the Rao family is concerned, all 3 sons are in the Privi business basically. So one of them is heading the US operations, entire marketing and sourcing and procurement and etc. His eldest son is already into the technical front. He has been serving Privi for almost more than now 15-20 years. He's basically a chemical engineer and is a part of the production gamut, in fact. And the eldest son is a person who is second in line to the commercial head as of now, in fact. So the Rao family is very much into the Privi business, and the succession has been thought about. And the main promoter, Mr. Mahesh Babani, who is the chairman and MD, his eldest daughter is already, is a finance professional, and she has been into the company's finance and a little bit of the marketing operations, etc. And she does help us in, getting an overview of that. So training has already been imparted, so that the succession planning from Mahesh Bhai, to pass it on to his eldest daughter, Snehal Babani, happens around, and possibly at the right time, a few announcements will also be made up.
Got it. That was very helpful. The second question is, in terms of R&D, you explained the process in terms of the number of products in pipeline. So generally, what are the criteria that are used to screen the new products in terms of say, market size, margins, or return ratios, competition? How do we usually screen on those, once these are successfully done in the lab as well as pilot testing, and we want to go in for commercial?
Excellent question, and I'm very happy that someone from the investor fraternity has asked this question. We keep talking about R&D. A very beautiful question, and the answer to that is also very interesting. All our new products that we look in at R&D are basically customer driven. So as we say that we give huge importance to most of our customers, and Mr. Mahesh Babani, who takes care of the R&D as well as the marketing, in fact, in his various visits to the customers or in various seminars and conferences across the globe that we attend on the pine space as well as on the aroma chemical space, the hunt is always that is to what could be the new molecules that Privi can manufacture to grow, apart from, of course, growing in the space that we are already into. And these ideas culminate from various of the customers across the globe, or sometimes it also comes across from our competitors who try to talk about and look into it. So this hunch is picked up from there. Then a study of the market is done. Then we come back and try to find out what could be the source ingredient and the technical capabilities that it will be requiring to manufacture such products. Is it within the so-called purview of Privi that we are doing it? And if not, how different it is from Privi's own vision of the 4 main key space that we are into, whether it will be possible or not possible. Sometimes even if it is
Sorry to interrupt. The line for management is disconnected. Please hold while we reconnect him. Ladies and gentlemen, the line for management is reconnected. Thank you, and over to you, sir.
Yeah, okay. Thank you, Jacob. And Rohit, sorry, I think the line got disconnected for some reason, in fact. Can you just possibly tell me where I was audible for all of you, in fact?
Yeah, you were talking about you get those connects from the customer competition, and then you come back and you start working on the drawing board in terms of sourcing the raw material, etc.
Absolutely. And in some cases it is also market driven, as I said, as was so in the case of Galaxo Mask, in fact. And we first and foremost, we do it at our lab scale, and are aware that both our R&D centers are recognized by Government of India. Post doing it at the lab and getting a clear picture as to what are the products and what are the ingredients that are going into manufacturing this product, we also do a very deep stick study on with regard to the market for the product, how it could be, what could be the margins, what could be the IRR, potential market for the product, who are our competitors currently, how good are their relations with our customers where they are selling it across. And how many of our customers are ready that, if at all Privi looks at manufacturing these products, we shall be in a position to get a share. What could be the share that we can look and tap it? And finally, what could be the growth potential going forward once we enter into this market in the next 3, 5, 10, 15 years. So honestly speaking, all this is done about. A complete IRR is done. A feasibility study is undertaken. A delta deviation study is also undertaken. What if it doesn't happen? There is a 10%, 5%, 15%, 20% deviation to what we are thinking about on being a practical and an optimistic guy. And then thereafter we go in and look in to invest into this particular capex, in fact. And we have a robust capex committee, and we have a beautiful independent board, where all these projects are put forth. The IRRs are calculated. There is a beautiful discussion that happens around, and a consensus is worked around. And then only we go ahead and take the step of actually starting spending on money on commercializing a project.
All right, sir. That was really helpful and comprehensive answer. Thanks a lot, and best of luck to you.
Thank you very much, sir. Thank you. Thanks, Rohit.
Thank you. Ladies and gentlemen, please limit your questions to one per participant. The next question from the line of Aman Vij from Astute Investment Management. Please go ahead.
Good evening, sir. My first question is on, so when we reach that 3,000 crore sales number, what kind of volumes will we be doing, as well as what kind of gross profit we can achieve, gross profit margins?
So volume could be closer to the 50,000 ton mark. So that's the expansion that we have already put in, and it's going to be there by March 2022. And my existing is around 37,000 tons, plus and minus 10% here and there. I think that's what we are looking between 48,000 to 52,000 tons. We should be in a position to touch closer to the 3,000 crore mark. And gross margins, I will not get into too much of nitty-gritties, but as we have kept repeatedly telling the investors and all of you, you should be looking at a margin anywhere between 17.5% to 20% on the EBITDA level.
Sure, sir. If you can briefly talk about, we have 4 segments, specialty, citral, phenol, and phenol. If you can talk about where are the gross margins the highest, if you can give it in order. I'm not asking exact numbers, but
so specialty, definitely specialty. The gross margins are the best there because these are high specialty products, very less competition. So the margins are beautiful. The second one could be on the pine base, because we are now backward integrated ourselves. So we have isolated ourselves from the vagaries of the Chinese and the spot market players. So that's going to be my second space. The third will be the citral and the sandal-based products. And last but not the least is the phenol. Phenol is something which is bulk volume, very less of margins in fact, and but it is required in every blend. So this is how I could possibly tell you how the gross margins work about.
So just one clarity, the 3 projects which we are doing, what is the peak sales we can get in camphor, phenol, and Galaxy Musk respectively?
So if we are able to sell all the 3 to its full potential, you can expect a sale of anywhere between 700 to 1,000 crore.
This is 3 projects combined, sir. I'm asking individually if you can give a range.
I'll have to calculate, and possibly, maybe in my next presentation, I'll be ready with that calculation too, broadly. If I have to get back into my numbers, 4,500 tons of camphor average, because it all depends as to what sort of a mix I'll be selling the camphor. Because if I'm going to sell everything on pharma grade, my revenue will be different. If I'm going to sell something on the IP grade, the revenue will be different. So I can only possibly tell the mix once I start manufacturing camphor and sell in the market. So there could be a trend that, maybe it's 50% perfumery grade, 25% industrial grade, 25% pharma grade. Fine. So I know this could be an average. So those things are too early today, for me to really state what could be exact turnover of camphor. I can only talk about volumes. When I'm talking, it is 4,500 tons of camphor and 4,500 tons of Galaxy Musk. So the permutation combination will be left as per the demand, for those products from the market. In fact.
So Camphor, if you leave out, what is the peak revenue from Prinol and Galaxy Max? If you can talk about those things.
I told you it will to 800 crores for all three products put together.
Okay, sir. Thank you. I'll get back in with you.
Yeah.
Thank you. The next question from the line of Zubri from Mondrian Investment Partners. Please go ahead.
Hi, Mr. Naran. Thank you very much for this presentation. One question.
Hey, hi, Zubair. Good to hear you back, in fact,
Thank you. I do want to understand, so, we are talking about the 3,000 crores for the next 2-3 years. I know we discussed sometime beyond that. I want to understand that the numbers beyond that figure, does that include menthol, or are we talking about menthol being an optionality there and the existing utilization of the top 5 products and the new 3 products would take you to the numbers beyond 3,000 crores, please?
Menthol will definitely be in the story beyond 3,000 crore. So as and when it happens, it will happen around.
And to what
initial launch was done on 1st of November. And as our MD himself stated, and I have personally also spoken to you and many investors, it is at the pilot level. At the research level, we have been able to successfully crack the novel technology that we talked about, and which is also there on our investor presentation. So as and when it takes about 5 to 6 months for the pilot to really do a simulation as to what's done in the R&D level, for us to really take the next step, of course, whether we can go ahead and commercialize the so-called technology that we are talking about. So as of now, I may not be in a position to give you too much of details what is beyond 3,000. So definitely up to 3,000, it's very clear with all the capex, with all the expansion that we have done, 3,000 crores looks very much in sight, in fact, in the next 3 years.
And just one other thing would be on the other expenses. I know you've discussed, the power and fuel and the freight, which is very understandable. But one thing we see as you've grown, that the other expenses have grown year on year, even as a percentage of your revenue. So that's fine, you've grown. But at what point can we expect a level of operating leverage where we do see, some sort of reduction? Not even if not reduction, but at least that expense flattening out. Or do you think the current power and fuel and the forwarding cost, do you think they've peaked and we expect some normalization as we move into next few quarters and years? And that broader number as a percentage of your revenue in a longer term perspective, please.
Okay. You're talking about what could be the idealistic situation of the numbers with regard to the fixed expenditure, mitigating
Exactly.
the volume of sales. Yeah. So, it's prima facie, if you see, my fixed expenses actually have not gone up even in this particular quarter. It is the variable expenditure which has shot up in this particular quarter, the quarter that's just gone, the bygone quarter. So whether it has been the fuel or the freight expenses or some of the RMC costs, all this contribute directly to the variable expenditure. The fixed expenses has been very nominal. In fact, it has reduced because there is actually very limited travel happening around because of the pandemic that's going around. The salaries have been frozen for the last 1.5 years. There's not been too much of a hike within the company, in fact, and most of the expenses are under tight scrutiny. So the budget itself is very, very low. So I can only visualize that, going forward from the quarter of January 2022 or, the Q1, the Q4 for Indians and Q1 for you based in London, you will see a change in the operating margin because the volumes definitely are going to increase. So is the revenue when I'm talking about. And to also inform all the investors that the sale performance or the revenue performance that Privi has clocked in the third quarter, that is December 31, 2021, is a record for Privi. We were not able to do the 400 crore mark on the consolidated one, but however, we are capturing the other income. We are somewhere around 405. But it was a zeal that, we do 400 in this quarter itself. Having said that, we should be able to definitely clock much better revenue starting from this quarter onwards from our existing product streams itself. And with new products coming in, and most of the contracts will start settling from July, and bulk of it will start coming from December 2022. I feel Privi is up for good times, and the variable expenses have already been considered while we have gone ahead and taken some of the price escalations from our customers. And spot business, definitely we look into what could be the best and how best we can absorb some of these expenses in the spot sales that's happening around. So you will see normalcy getting restored from this quarter itself, and better of it will start coming in from the Q1 of 2022.
And just a very quick question on the mix. So would it be 65-35, 35 fixed and 65 variable costs for you?
Overall variable could be about 70%, and balance will be fixed. Yeah, so your fixed cost will be about 15%, so your percentage of profit should improve around in Friday.
Okay, that's fine. So 70-30 is the breakdown.
Broadly, yeah.
Okay, that's fine. Thank you very much. Appreciate that, Mr. Narayan.
Thanks, Subir.
Thank you. Due to time constraint, that was the last question. I now hand the conference over to the management for closing comment.
Thank you, all of you investors. It's been a pleasure talking to you all, talking and interacting with all of you. I can only say that Privi stands for commitment and deliverables as far as the aroma chemical space is concerned. Of course, now we have an added responsibility for creating wealth to our investors. But our track record and history says that whoever have been our investors, whether it was privately held or now publicly held, investors have always been happy around, because our promoters mean business. Our promoters only talk, sleep, eat, and is completely passionate towards the aroma chemicals. So with such strong focus from the key promoters and a very, very, very strong lineup of the professionals who run this business or who run Privi here, we are in for good times going forward, and the next 2-3 years looks to be very, very prominent for Privi and all those people who are associated with Privi. So on that front, a great weekend to all of you. Enjoy the balanced day of Friday, and thank you very much, and stay invested in Privi. That's what I'll say. Thank you.
Thank you. On behalf of Asian Market Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.